Good morning, good afternoon, or good evening, as ever. Please say hi in the chat box, especially if you're new. Tell us where you're from and your current level of experience. And if anybody in the room could let me know what's happening next in Trump world, I would be very grateful. There's an announcement this morning. I can't find the article now, but he's imposed taxes of up to 3,500% on some of the Asian solar panel manufacturers. Just one second while I shut this window because somebody's decided to start drilling in the next street. Morning. There we go. Paul says, hi all. Paul from Leeds. Oh, another Leeds lad. Level learner trying to build knowledge and confidence. Well, have you got a sore head this morning? Indy from Leeds as well. Crikey, Mo. Well, it is a very appropriate title screenshot we've got up this morning, isn't it? Couldn't believe it. My flipping telly stopped working last night. I don't watch the football much these days, to be honest. I find most of it too theatrical and too much cheating going on. My wife's a religious watcher, but I was going to watch the Leeds match last night and we couldn't get the telly to stop freezing. And it was, by the look of it, the best performance they'd had. And they won 6-0, I think, last night. And they have got promoted back to the Premiership, which, if you're not into football or you're not from Leeds, is probably of zero interest to you. But I am not going to apologise. Righty ho. Trying to work out what's going on at the moment is not very easy. And somebody was posting, well, one or two posted in the forum, and Mr. Frush, I've forgotten his real name, he was saying he basically could just find one thing this week. And then there was Nat, another Leeds lad. He was, I think it was Nat, that was saying he couldn't really find anything. And he was off back to study. And it was like, don't worry about it. The moment we trade breakouts and pullbacks, and all we've had at the moment on most forex pairs is breakouts that have just kept going. And so I said to Nathan, you're doing fine, don't worry. And we're all struggling to find 5 reasons at the moment, but that's great because you can focus on other important things in life and could go back to that, I suppose, really. So all in all, don't panic. We are living through absolutely extraordinary times. These are insane times. And it was crazy last time with Trump, and I lived through that, as did many of you here, traded through it. It wasn't easy. At the moment, it's nuts. But there are clues that he's going to have to do something very, very shortly that could give us opportunities to make some dosh. So that's the positive note. And as I say, for those of you struggling at the minute, Ashley as ever has found head and shoulders pattern. He's gone head and shoulders patterns mad of late. And once you start seeing these things, you can't stop seeing them. But the main thing is he's making money from it and therefore get in the forum and have a look. Oh, he's found another one. Our head and shoulders specialist from around the world. And then, did he get in as a panelist? Yes, he did. And then gold this morning hits 3,500 for the first time as Trump's attack on Powell rattles the markets. And as we know, Trump is putting pressure on to Powell because he wants him to cut interest rates. And with the dollar falling and everything else that's going on, normally that wouldn't be a bad idea. And ultimately, they'll start printing money again if things get really bad. And the Fed, I read an article a while ago. I mean, the Fed have been absolutely useless basically since their inception. The whole thing is a scam anyway. It said in one of these papers yesterday, I can't remember if it was the FT or the Telegraph, the American Central Bank. It's not a central bank, it's a private company. It was created to supposedly stop boom and busts, and it's done an appalling job of doing so. And as we know, Powell was so slow with inflation after COVID 2022 and 2020 that they've been behind the curve all the way through. But it's a private company. Nobody knows who owns it. Nobody knows who gets the distributions from it, which is completely bizarre. But the rule at the moment is that Trump can't sack him. But you would think if things get much worse, then Powell is going to have to do something. So at the moment, there's a standoff and not helping the scenario any better. In terms of gold, you know that I started buying gold again in 2022 when it was 1,800 bucks and explained why. We've nearly doubled now in 2 years, which is an amazing performance for gold. The issue now is somebody asked me yesterday about whether to take profits. And I kind of thought about it myself, but what the hell else do you put your money into that has any kind of level of safety at the moment? And I've got more than 30% of my assets tied up in gold and gold mining stocks. And I'm going to show you some opportunities in mining stocks in a little while because what you have to think about, and I've talked about this in the past, and you'll find it in my blog. If you go back into FMP in here, and you go to the home page, and you go to my investing blog, I spoke about joining the dots, learning to understand what's going on, and joining the dots. And so, if you go into my investing corner, and you have a scroll back, you should be able to find this post. And can't remember now. Sorry, I was late this morning. I woke up at 4 o'clock, got up, did some work, went back for a kip, and then the alarm went about quarter of an hour ago and I had to get back up again. But if you go back through here, you will find it. And it's talking about joining the dots. And what I meant by that is looking at what's happening at the moment and trying to work out what's going to happen next. And so when I got into gold in 2022, I was explaining, I thought that inflation was going to become a big issue and it had the potential to do particularly well. I explained in 23 and 24, and especially in 2020, why I was getting into crypto. And in here, I was talking about if you don't understand what's going on, really going on, you're going to get screwed. And most people don't really understand the financial world. If you're relying on your mainstream media for news, then you're not getting the correct picture. You're just basically pawns in somebody else's game, and you will continue to get played. It may be that that is
I put the
actually
link in the chat box,
in
Mark.
here. Where has it gone?
Hi, Mark.
So live training sessions are put into here. My part goes into here. And then if you go into the education area, you can scroll back here, going back years. We have been cleaning it up of late, but hopefully the one about joining the dots is still in there. I'll leave you to have a look. So, moral of the story is we can see what's going on at the moment. So, what do we think is going to happen next? And though nobody is able to. Oh, sorry, actually, no, I can't hear you. Ashley's saying I can't hear him. Hang on a second. It might be I've got the wrong headset. No. Let me change headsets. 1 second. Can you talk for the group, Ashley, and see if everybody can hear you?
Hi, everyone. Can you hear
And can
me?
somebody say if they can hear Ashley,
Yeah,
please?
just give me a thumbs up in the chat box. Yes, says everyone.
Right. Dan says yes, he can hear you. So hang on, it must be my headset.
Okay.
Ashley, say something.
Yes, can you
Thank
hear
you.
me?
Yeah, I can now. Yeah.
Yeah, I just was saying I found a post joining the dots. I think that's the one you were talking about.
Oh, excellent.
Mark's crypto stocks joining the dots.
Okay. Well,
I
can
put in the
you?
chat box.
Oh, excellent. Right. Let me find it. There we go. Well done for Ashley for finding that. And can everybody else see that? No, I think you've just shared it with hosts and panelists. Can you share it with everybody, Ashley, so it saves people having to scroll around? So here, this is the idea about talking about what's going to happen next. Where do we think what do we think is going to be the next big thing that could make us money? And therefore try to work it out. Now, the important thing with all of this, so gold is at 3,500. To say normally, I would think about taking some profit. The other week when it did a pullback, and this is how crazy gold has got of late, I said that I would be a buyer at 3,000. And that's turned out to be a very good decision because, and I think I also bought some more at 2,950, but that has gone up 13, 14% in a week. So even if you were late to the party, if you bought on the recent pullback, then you will have made good money on gold in the last few weeks. So the same scenario again, as profit taking kicks in, then you would expect price to come back down. And then this time you'd be thinking around 3.1, recent high and the fib. So anywhere between 3,000 and 3,100. It's quite logical, probable that people will start to get twitchy and want to take profit. Where they're going to put the money next is the issue. But one of the interesting things is I was reading a report yesterday, and this is the futures for the 30-year Treasury bond. So as you know, I normally look at the 2-year notes. I'm seeing what interest rate the US government is having to pay to attract lenders. And so the 10-year note at the moment has just come back and done a retest. So that was a perfect M2 breakout to the trend line and to the 55 EMA and spiked back up again. So the US is having to pay more interest to borrow money, which means more of their tax revenue is going to be going straight out the door in the first place to pay debt before they have any money left to pay for anything else. This is the important chart. This is the T-bond futures for 30 year. Here, 8, 9 days ago, is where Trump backed off with the first round of tariffs. Anybody remember why Trump backed off? Stick it in the chat box. Actually, you put it in the host and panelist again. You have to share it with everyone. I'll do it. Here we go.
I don't have that option. It says host and panelists and Mark
Ah,
Bottle.
okay. It's because I'm the host. Let's put that in there. Okay. You should all be able to see that link now, guys. So why did Trump back off the other week? What was the fear in the markets? What was he going to damage? What was he going to break next that really could bring the whole lot down? Well done, Indy. The bond markets. The bond markets is the way that the governments around the world and companies raise money by getting investors to put money in it. And the US Treasury bonds have been seen for the last 30, 40 years as a safe haven. Safest place to lend your money. You don't get a great return from it, but it's safe. Now, that has been under pressure for the last 10 years or more. And I've said before, I think in my life, certainly in Ashley's lifetime, I doubt that the dollar will be the reserve currency of the world. They have, as opponents see it, have abused it for years. The Uncle Sam bullied banks around the world not to take American citizens on penalty of being expelled from the dollar. And Putin has pointed out to any of his cronies or any other regime leaders who feel the same way as him and said, look, hey, look what they did to us. They tried to screw our economy by cutting us off from the dollar. And you've now got countries around the world where Russia and China have been trading between themselves in their own currencies for years. Saudi Arabia did a deal last year with China for oil outside the dollar. So there's lots of things have been going on away from the dollar in the first place. But the more that Trump damages the confidence of investors, then that ain't good. So what happened here, this was the original carnage, and then suddenly he came out and said, "Oh, okay, I'm not kidding, but I'm going to give them an extra 90 days." But we start getting down into this territory, and then you have to join the dots and think, well, what could happen next? And what happened with the Nasdaq was exactly the same. So I have alarms set on all of these indices because I'm expecting if the S&P gets back down near 5,000 again, I am expecting a reaction. It's not to say it won't go further and retest further. And if it did, I would think 4,800 with the 200 EMA and previous support and resistance would be the last line in the sand. But at some point, you anticipate a big reaction. Now, I have bought some US stocks of late on dips. Apparently, the big boys are not buying, allegedly, but you can't trust a word that they say. But allegedly, they have not been buying in any great volume. It's supposedly us retail traders who, in our naivety, are buying the dip because the dip has worked so well for so long. And I showed you the other week, well, with the S&P, you go back to 2008, those who bought the dip basically saw a pattern like this. They bought the dip, they bought the dip, they bought the dip. Oh crap, it went down 50%. So there is that danger at the moment. So my main stock holdings still are gold, physical metal, bought through Bullion Vault in London, stored in Switzerland. And then I have a lot of gold mining stocks I've shown you before. The good news is that the mining stocks are pulling back at the moment. And again, join the dots. If gold drops, what happens with the miners, it tends to be that the miners go up slower than gold, but they come down quicker. So if you feel that you've missed out on gold or you've missed out on the miners, and I've shown you many times before, with the miners, last year, silver went up 40 odd percent. My best miner went up 260%, which was this one, EXK. So I bought down here with the investing group. I told you guys as well, probably later in January, it was the COVID low. And it was nuts because silver was going up here and this was down here. Made no sense whatsoever. So that went up in total 260, 270%. And then I have bought of late, I bought some more. I mean, I bought, still got some left from here. I bought in here on dips. I bought here. I paid up here the other week. And then I bought again in the last few days down here. Now, at the moment, technically, it's coming back into EMAs and everything else. There's a good chance if gold tops, if silver goes on a run down because of this news about Trump with the tariffs with the solar panels, in which silver is one of the big ingredients, then this could go further. I will buy. That's me joining the dots because, as I explained the other week many times as well, the silver and gold in the ground at the moment is selling at a discount, is my way of looking at things. Now, even if you were to buy in here at the moment, I only buy a stock if it can make at least 35% to the recent high. This was 50% higher in November of last year. So 6 months ago, it was 50% higher. And a month ago, it was 35% higher. So for me, this is still a buying area. The EMA is a concern. It may go further, but what I tend to do is nibble my way in. And what I mean by that is that I will buy in stages. So I did it on Amazon recently. I don't know if we've got Amazon on here. Where have we gone with Amazon? There we go. So Amazon, I started nibbling my way in here because this was a big area of a potential bounce, which it did, and then it dropped further. And I have bought more here, and I have an order in down here to buy yet more. And that way, let's say I was going to put $1,000 in. I bought 250, 250, 250, and I am going to buy another 250 here. I do not use stops. I sometimes hedge with leverage, and at the moment, as I've explained before, I am learning options and I am using options at the moment. I bought a put on the NASDAQ 6 weeks ago, and that is in significant profit. I bought two of them, and they, whilst the NASDAQ is going down, they are making money. And so my crazy high yielding stocks are coming down. The drawdown in them is more than covered by that. And the same with gold. My stocks are down, but not a massive amount because most of them are gold and silver related. And then these that I bought the other week, these are some of the FANG stocks. And another piece of research that was a big help to give me the confidence that I'm doing the right thing here is I bought Google. Really don't like Google and its practices and all the rest. I think it's just got done in America for sharp practice, and the Europeans will be after them next. But they've got a monopoly. They've been getting away with it for years. And Google at the moment is 40% off the high from 2 months ago. So those, and again, this is all about emotion. Those here, especially, there's a gap. Can't remember what it was. It was some kind of news, no doubt. People who are thinking, oh, I wish I'd bought it. Oh, crap, it's gone with, I'm never going to buy it now. No, I wish it'd come back down here. I mean, if it had come here, I'd buy it. Oh, if it came here, I'd put my house on it. Oh, crap, it carried on going down. So the point is, this is discount. This is sales time. So my way of thinking, why I have bought these and what's given me a bit of added confidence is all of these companies, the ones you can see in light blue that I have bought recently, all of them have spent a lot of money on AI. And there's been a lot of negative press about AI, basically saying that all these companies have spent far too much money and they're not seeing a return. But I was reading about quantum computing of late, and there's some really good videos on YouTube and talking about how this lot, the AI and the money that they pumped into AI, is also going heavily into quantum computing. And quantum computing basically it means that the computers will be so much faster, so much smarter, learn from their own mistakes. I mean, we're really going into the Terminator world now of Schwarzenegger. But these things, by all accounts, will revolutionize the world again in speed and cost and all the rest of it. And so for me, it doesn't matter to me if these go further. I don't mind if they come all the way back down here because then I would buy some more. But I'm not putting my house on it and I'm not putting a big percentage of my investments into it. But it just gives me a little bit more added confidence to hold and to buy on dips. Now, a lot of them have already got this Death Star cross. The 55's crossed the 200. This is very bad. You start putting trend lines on a lot of these for a downtrend, and we are in a downtrend. And so it's a brave man or a fool who's buying at the moment. But if you have a strategy and you join the dots and you say, well, hey ho, I wanted to buy this for ages. Those people who bought this in here in April of 24, will be the ones who were the risk takers. There was a gap again, probably news, a gap up, a gap down. They were the risk takers, but they were the ones who had the courage of the conviction to buy. And then Google went up 85, 86%. The other option, of course, is you just buy and hold forever. But I talked about that in detail in last week's live training session. The days to me of just buying, saving money for 50 years for your pension, and then just putting into dividend paying stocks that might give you 4% if you're lucky pre-tax, I think is a really, really poor investment strategy. And I think the days of that for me, well, I was never into that anyway, but the days of that for me are well and truly over. So I start every day looking in here. We've got the dollar index. So the dollar now has broken 100. Massive, major previous support and resistance, psychological level. Clearly, it's on its way. We only want to sell the dollar. The issue is, if you are trying to sell the dollar index or any of the other currencies at the minute, we need 5 reasons, and we just haven't got them. So walk away. Or, as I showed on Sunday in my analysis, you can go down to a 4-hour and start looking for trades there. Or you can go off and look at other asset classes and look at gold, look at silver, look at some stocks, because I use M2 for all of these things. The pound at the moment makes no sense to me. The pound is not getting stronger. The dollar is getting weaker because this is the pound against the USD. The British economy is not in a good place. It's run by a load of lunatics. They have no commercial experience whatsoever. The woman in charge of finance lied on her CV, said she'd worked at the Bank of England for 7 years, and apparently she was on the customer service desk for 2. So it's all run by idiots and clowns. The economy is in a bad state. Politically, the place is falling to bits. This is not a reason for the pound to be where it is at the moment. But it's coming up to 135, major previous support and resistance. So that's an interesting point. So if that's coming up to there, and the Euro USD is currently up at the monthly 200 EMA, and again, another previous major area of support and resistance. Swiss is drop. I mean, you can't trade that. Where the heck do you put your stop on this? And this is the whole point of all of this. You're looking for multiple reasons of where is this going to go next. We are at extremes. This is not normal. And then in the background, the reason it's not normal is what Trump is doing. And so again, if we scroll to the left, the last time we were down here was after the financial crash. So 2008, 2011, this is where we were. This is how bad it is. And we may well be already in an equally bad recession as we had back in those days. So at the moment, where's it going to stop? I have no idea. So how do you calculate your target? Where am I going to put my stop? Well, I've no idea. I could put it there, I suppose, which is 200 pips away, but it's just as likely that it's going to bounce back up again as to go down. And therefore, to get involved at the minute, you're gambling. You're not trading, you're gambling. This is the dollar yen. The dollar yen. So ideally, we want to pull back all the way back up here. And you may say, well, it's never going to do it. Well, it's just done in recent weeks. It's dropped 1,000 pips in a matter of weeks. It could well do. So the sensible, cautious trader is going to wait for this. Now, the other option down here, a counter trend trader could say, well, I am going to buy this. I'm going to buy it, and I'm going to put the stop below the 200 EMA and then cross my fingers and hope it goes up. And it might work. But you don't have multiple reasons. You're basically 50-50, which is still gambling. Taking the dollar Swissy at the moment is 70-30 against, because you have no idea. Now, the NASDAQ, as we've just looked at, we know that when the bond market rejected, this is where the NASDAQ kicked off. If you were going to sell the NASDAQ now, the first place of interest you would be looking at would be here when the EMAs catch up. Major previous support and resistance trend line. We could fib that to there, which would give us at least 50% fib. So that would be an interesting area. Equally, you could, if we're getting down here, start to think about buying some blue chip stocks or some mining stocks that are currently on the floor. Same for the S&P, etc. So all of that lot, and then the UK economy, as we've seen, that was the drop that we had in that. And then also with gold. Sometimes the price of gold can be screwed because what's happening here, part of the reason why gold is going up is because the dollar is going down. So is this just the dollar drop that's causing the rise in gold? Well, if you look at the gold against the pound, it's still doing the same thing. So gold itself is actually going up, not just the dollar going down. Now, silver at the moment, this was another example of buying in bits. So I said to folks when it got up to here and it kept rejecting up here, and the bullion banks and the hedge funds, etc., are fighting it up here, particularly JP Morgan, then I was buying back in again here and here and here. And now, if we've cost averaged in this recent move, let's say we're cost averaged in here, we're up 10% in a month. Oh, we're at in 3 weeks. So now I've just shown you with EXK, have a look round at some of the other mining stocks because there are possibilities with a lot of them. And then if we have a look at mining ETFs, so you have GDX. Now this is the issue for a lot of the thing. I never buy anything at the top or at the bottom. Remember, with a stock, I will only buy a stock or an ETF if I think it can make at least 25% in a short period of time. I only buy a crypto if I think it can make 35% in a short period of time. So what would I put onto here to try to give me an idea of a pullback where to buy? Dan was saying about the bond market. The bond market, Dan, is just simply governments every day of the week, or most days of the week, are selling debt. They say to you, lend us money and we will pay you X amount of interest. So that's how the bond market works on a very simplistic level. Fibs, yep. So we're going to put the fib on, says John, and says Indy, correct. So we're going to fib from the recent low, which is here, to the recent high up here. And the first thing that then should jump out at us is we start to look at for multiple reasons. And a recent high clearly is here. And we've got that as a resistance point there and a resistance and then support here. Just under 50, the whole number, 55 EMA in an uptrend. And we could put a trend line in here to give us more confidence. But that is, if you don't want to start buying individual mining stocks are more profitable, but it's more work and it's more research to understand what's going on. But anywhere in here, you then have the potential with an ETF, you won't make the 25% though, 20%. But they manage it, you don't have to do anything. And that's for mining stocks. And then this one, GDXJ, is junior miners. So if I was going to put money into mining stocks and I didn't want to buy them, I would go into GDX and GDXJ because then it gives me exposure to the big miners and the smaller miners. And again, on here, you would be doing the same process. So you'd start to look about where would we like to get in. That would be certainly the area to think about. And again, it's probably only going to give us 20%, is it? 21%. But that's the way to look at it. And again, you could put a trend line in as well as. So build a picture. All the time, we're trying to build a picture. We're being intelligent. We're being sensible. We don't want to buy it here because everybody else, it's starting to run out of steam. And nobody in the right mind wants to buy when everything is at the top. That's when retail will get sucked in. The smart move is to wait for the pullback, which goes back to what I was saying at the beginning of this, is if you can't see anything at the minute, don't worry about it because it's nuts. This is the Junior Gold Miners Index. I used to use this a lot for this goes the opposite way to the miners. So I used to use this to hedge because I don't use stops, then I would use this. But now I'm looking and using options, which is better. And then you've got various ETFs as well for silver. Royal Gold is at too high, Wheaton's too high, Fresnio's too high. So again, do the same thing. Stick your fibs on, do M2. That's all you need to do. And the area that screams at me here is here. So you've got 800 would be a very interesting area to buy Fresnio, one of the biggest in the world. And that would give us 30%. So set a trap now. Now I have been looking at platinum for a while. The spread on physical platinum is horrible. And I can't find the chart this morning, but when you compare gold against platinum at the moment, platinum is absolutely on the floor. But when you look at this, it's not doing a right lot. So one of the spreadsheets, news sheets I read was pitching it the other day. I'm not personally convinced. Copper down here, if we go into recession, copper normally will not do well because copper is often seen as a leading indicator for expanding economies because copper wiring you imagine a new high-rise building, there's copper everywhere. And so if we go into full-blown recession, and particularly as at the moment the construction industry in China is on the floor and other countries are starting to slow down, then copper, for me at the moment, is not a great idea. And hence why it is probably dropping. And again, we've got EXK down here. Any questions on what we've looked at so far? You just have to check, Dan. I mean, I noticed Dan saying, do the prop firms offer CFDs? Just check. I noticed the 5%ers are doing something with stocks now. I keep meaning to have a go at it, but because I don't use stops and I hedge, I think it probably wouldn't work for me. But I did see the other week that they were doing stocks. So obviously, the more you can use other people's money to profit from the skills that you're learning with us, what the heck? Then explore all possibilities. And again, things like the bond market. If you don't understand the bond market works, Dan, there will be a section in here under education about fundamentals. But just get Googling, ask ChatGPT to explain it to you. Because ChatGPT, Grok, etc., are brilliant. That if you ask the right questions, they will explain everything in simple terms. And you tell them, I just want a short explanation of how does the bond market work. And here for funding programs with the 5%ers, Ashley has used these. I personally haven't. But I'm sure I saw the other week that they do stocks as well. So get in there and dig around and have a look. Dan says there's a crypto prop firm now that offers 1 to 5 leverage. Would you consider trading crypto on prop with low leverage, with low funds to break? Let's have a look at this one that Dan's talking about. I would need to have a good look. You want to make sure, well, if it's their money, well, that might be interesting as well. Good find. We'll have a look at that one later. So well done on that. Now, another spanner in the works. This was a really bizarre comment by Trump the other day. I mean, he doesn't drink. If he did drink, you would think it must have been after a night on the beer. The golden rule of negotiating on success. He who has the gold makes the rules. Thank you. Well, there's a strong, strong feeling, rumor, suspicion within the gold community that China owns a massive amount, 10 times more than they claim to own. So unless that means that America has got shed loads more gold than they've let on, I didn't understand this statement at all. Golden rule of negotiating and success. He who has the golds makes the rules. Well, China has got the gold. I don't understand that one. As I say, if he was a drinking man, I would have tried to add some logic that way. And then here, so going back to bonds, Dan particularly, the bond market is where hedge funds traditionally would park a chunk of their money. So a hedge fund will say to you and me, right, give us your money, we will invest it in the stock market and we'll put some in government bonds. And often they'll put 40 or 50% into government bonds. Why, Bill? It's easy for them, they don't have to do anything. And if government bonds are paying 4%, then that helps their funds to not lose money. And then they will take more risk on stocks. And so traditionally that's what works. But also you have countries, in effect, are buying up a huge amount of American bonds. So the Chinese at one point, I think, had $1 trillion worth of bonds. And a bond is lent for a specific period of time. So a 2-year bond, in 2 years' time, the American government will give you back your stake. And in the meantime, they've paid you interest. For the last year or more, the Chinese, the biggest buyer of bonds, has cut back significantly. So when their bonds come up for renewal after 2 years, they don't buy anymore. They're taking the money out and putting it elsewhere. The Japanese equally have been buying less American bonds. And if you think about it, if America was a company, America is bankrupt. Their debt is way outfits their income, and therefore it's a very bad bet. But because they've got the printing press in the basement, they have been able to print their way out of it. But if confidence starts to fall, and now with Trump and the fraction, the breakdown between Powell and Trump is going on, less confidence, people are less inclined to lend them money. There's a further knock-on effect. Companies issue bonds. And so a lot of companies, it's a way for them to raise money rather than directly through a bank loan. They will pay interest if you lend them money. Now, because people are pulling money out of stocks and put it into gold, or they're pulling it out of stocks to pay margins or whatever else, they are less likely to buy corporate bonds, which means a lot of companies, particularly the smaller ones, could end up going bust, and therefore the bankruptcy rate would go up as well. As an offshoot, an aside, I was thinking about buying Uber the other day, and the FTC have gone after them, which is interesting. So that's one thing to keep your eye on if you were thinking of buying Uber. US stocks and dollar sinkers, Trump renews attack on Powell, which is what we've just been talking about. And then the Bank of England, somebody said something at the Bank of England, not really that important, I don't think. But again, they're having a row with Trump, the Kremlin. In the background of all of this, it would appear that negotiations are still ongoing in a positive way between Russia, Ukraine, and America in terms of peace. And what the Kremlin are saying here, they're satisfied with the US proposal to ban Ukraine from NATO. This was, I've shown this many times before as well. There was a Mike Maloney presentation about this in 2015. And also an American professor spoke about Putin had said many, many years ago, NATO, Ukraine going into NATO was a red line that he would not accept. This is the new head of NATO, who appears to be a bit of a warmonger to me as well as. But that would be very interesting. And that could be that we would actually finally see a truce and hopefully an end to this war. So that's going on in the background. This is City Scrambles as Trump's trade war sends debt markets everywhere. This is talking about corporate bonds and how debt-laden corporate borrowers could be in the doo-doo. Because if they have bonds coming up for the end of their term and need to sell new ones, they may find it very difficult to raise money. And that could cause unemployment, could cause bankruptcies. So going back to what I was talking about earlier, we're coming to a tipping point again, and the tipping point is here. So my thinking is, if there's a few stocks I've been thinking of buying more of, or I want to buy some more high yield stocks, I will be looking closely in the next few days. If we get back down here, I am going to buy some more. And I say, you could use it as an opportunity if gold peaks and drops, because if there's a relief rally in stocks and they start to go back up, then gold predictably would come down. And that then would be the time to be thinking about buying gold or buying gold stocks. Any questions before we go over to Ashley? I think actually I was talking about, let's just quickly have a quick rattle through here. So this is the dollar index. It's a bit cleaner on MetaTrader, and we are at a major area of support and resistance at the moment where it's bounced. So again, we always go looking for where did this thing bounce in the past. I haven't got multiple reasons to buy it here, but it's logical there. But if we get through here, then we could be on for the 200 EMA, because looking to the left, I don't see too many places of real strong resistance or support. We might be off down here. If we get down here, you would anticipate a bounce. Therefore, you'd be looking at what do you think is going to happen next. Same with the S&P. If you were going to short this, the safest place would be back up here for multiple reasons. So the moral of all of this is just you have to be patient and you have to wait. We've looked at all of those. And then I showed the other day, I caught this on my live account. I've adjusted the stop on this, so I've gone just above the 55 EMA, which is the weekly. Here on the demo, I missed the blooming thing. I don't know how, because it spiked into my stop, but somehow it managed not to fill. But the most important thing, it filled on my live account. But here would be a pullback of 130 pips. The EMAs are rolling over. Could be the start of a downtrend after a long period of up on the Canadian dollar. So that would be one trend line, and then the next trend line would be here. So can you see the confluence? So that to me is an A grade to short. That I actually mentioned the dollar yen at the minute. As I said earlier, the only thing you could do here is you could take it from down here, but you're guessing as to where to place the stop. AUD stuck in the middle of a few. NZD, I think Ashley wants to talk about these. This is the euro pound I showed on Sunday as well as. We're clearly in a range at the moment. Not happy that this is in the middle as well as now. So it's not easy. It's wild. It's crazy. But you just got to be smart. You got to be willing to wait. Right, over to you, Ashley.